Hello traders, Mark Chapman here, the creator of the trademark Track Traders concepts. Welcome to Super Thursday, the 2nd of November 2017, named so as the Bank of England will publish a slew of information, all big, massive, market moving stuff, all in one go. Virtually impossible to understand it as it's released at 12. You've got the inflation report. Very difficult to obviously get that interpretation done in such a short amount of time when you're trying to make a trading decision. Then you've got the vote split, again that's difficult to interpret. You've got the summary, again you've got to read this stuff and there's detail. And then we've got the rate itself, and if that wasn't bad enough, at 12:30, half an hour later, we've got the unreliable boyfriend. Let's see if he lives up to his name. At 12:30, going to give a speech. So if the hike, you've got to expect sterling to rally strongly, because it is the first hike from the Bank of England since the crash. I think it's madness that they're doing it now. That's my personal opinion. I know there are others who disagree with that and agree with it also, but I just think the economy is too fragile. There's too much uncertainty going into Brexit. I just think it's the wrong moment to do it. I always strongly believed that they wouldn't do anything until after we leave the EU, but that doesn't obviously seem to be the case. If he were not to raise interest rates, there would be a huge opportunity to sell sterling. But there's another, easy for me to say, sell sterling today, because obviously if you've been reading the wires, the sentiment surrounding this news today has been obviously large, and I would say the general consensus is that they're going to raise interest rates. So if they were not to raise interest rates, then you want to be selling the shit out of sterling today. That should be your plan. Going against the herd is always a smart thing to do. The other thing I would suggest as well is, if the hike and you want to buy pounds, look for a currency pair to trade the pound against where there's a little bit of value in the chart. So for instance, if sterling was here, let's say, and let's pretend that all this to the left hadn't happened, and this was just like a nice strong trend, and this is where the rate decision is actually published, then you don't really want to be buying something that's been going up, right, for ages. There's a good chance that you'll get faked out, and the market will nail you on the other side, and nail you in a brutal fashion, especially under these types of news event conditions. So be careful of that. You don't want to do that anyway. Just don't do it. Look for the opposite of that. Look for pound weakness going into the result, and then that's going to give you plenty of juice to the upside. If they do hike, not so much of a dumb trade. So just scan through the pound pairs and see what you see. Pound dollar looks decent, as yes, we've been going up on the expectation of a rate hike, right? Buy the rumour, sell the fact, perhaps. Much more likely if the market's heading up strong sterling into the actual news event itself. Fact it's selling off is a good thing, so keep an eye on that. But yeah, if on the other hand they don't raise rates, then you want to look to the pound strength and then sell the shit out of it on the other side. So if the hike, you want to find that weakness in sterling before the event. If they cut, you want to find that strength in sterling and sell the living daylights out of it.